What if I told you that the absolute foundation of the modern world, the literal black blood that powers every single global economy, became so incredibly toxic and financially radioactive in a single afternoon that Wall Street billionaires literally paid people to take it away? Welcome to Money's Hidden Past. Rich people lied. We fact-checked. Today we are breaking down the absolute financial apocalypse that completely broke the global oil markets in the spring of 2020 to understand how the price of oil could magically fall below zero. We first have to understand that the modern global financial system is essentially a massive unregulated casino built on top of the physical world, where the heaviest players have never actually touched the real product. When you hear a television anchor announce that the price of crude oil is up, they are not talking about a physical barrel of black liquid sitting in a warehouse. They are talking about a highly complex mathematical financial derivative officially known as the West Texas Intermediate Crude Oil Futures Contract. A futures contract is simply a legally binding piece of commercial paper that says you absolutely agree to buy 1,000 physical barrels of oil and take physical delivery of that unrefined oil on a very specific future date at a specific pipeline network junction located in Cushing, Oklahoma, Wall Street. Traders buy and sell these paper contracts all day and all night, making tens of millions of dollars by betting on the direction of the price. Their entire lucrative business model relies on a massive game of financial hot potato without ever intending to take actual possession of a single drop of crude. They buy the paper contract, hoping it rapidly goes up in speculative value, and then they quickly sell it to a real energy company or a massive refinery right before the contract expires, and the physical delivery is legally required, and for decades, this highly abstracted system worked perfectly without any major issues. But in the early freezing months of the year 2020, a mysterious new respiratory virus began spreading rapidly across the globe, forcing panicked governments to suddenly slam the brakes on human civilization and triggering the fastest and most brutal economic shutdown in modern history. Almost overnight, the global demand for refined energy completely vanished. Major international airlines parked their massive fleets on empty desert runways. Morning suburban commutes ceased to exist as highways became desolate. Ghost towns and massive container ships dropped their anchors and simply stopped moving. Human civilization simply stopped burning fossil fuels on a planetary scale, but the gigantic global oil extraction industry cannot just be switched off. You cannot easily tell a deep water ocean drilling rig to simply stop pumping, because shutting down a physical pressurized well can permanently destroy it, exactly when the global market desperately needed leadership and stability. The two biggest egos in the entire international oil business decided to engage in a highly destructive and incredibly petty geopolitical staring contest that would purposefully pour high-octane gasoline onto the already burning market. Vladimir Putin aggressively refused to cut Russia's national oil production, hoping the resulting price crash would bankrupt their rising American shale competitors, and the Crown Prince of Saudi Arabia was absolutely furious at the disrespect, deciding to brutally punish Russia by launching an all-out catastrophic price war instead of responsibly reducing the flow of oil to match dying global demand. Saudi Arabia intentionally flooded the market with a massive surplus of cheap crude, slashing their export prices to the absolute floor to punish their geopolitical rivals, drowning the entire global storage network in millions of entirely unwanted barrels. And that brings us back to the small, dusty Midwestern town of Cushing, Oklahoma, the designated mandatory delivery point for the American WTI futures contracts. Cushing is a massive, sprawling landscape of giant circular steel storage tanks, capable of holding roughly 80 million barrels of physical, unrefined crude. Normally, the oil flows continuously into Cushing and flows right back out to refineries, but because absolutely nobody was refining oil into gasoline for empty highways, the oil was only flowing in, and the massive steel tanks were filling up incredibly fast, rapidly approaching their absolute maximum physical and engineering capacity. The Wall Street traders, sitting in their climate-controlled high-rise office buildings, were completely disconnected from this massive impending physical reality. They were holding millions of dollars worth of the highly leveraged May futures contracts, blindly assuming they could just sell them to the refineries, exactly like they always did. But as the final deadline for the May contract rapidly approached in late April, the arrogant traders suddenly realized that the financial music had completely stopped. Every single square inch of storage tank space in Cushing, Oklahoma had been leased, and there was literally nowhere on the North American continent left to put the oil. Suddenly, the Wall Street gamblers were facing a terrifying and unprecedented reality. They were holding legally binding federal documents, forcing them to take the physical oil. With absolutely zero storage capacity available and no buyers anywhere in sight, and the sheer panic that gripped the digital trading floors was absolutely biblical. Compounding, this massive institutional disaster was a brilliant trap set for retail investors. Millions of regular working people sitting at home bored during the pandemic lockdowns saw the price of oil dropping and thought it was the financial investment of a lifetime. So they aggressively poured their life savings into a popular product called the United States Oil Fund. The United States Oil Fund was an exchange-traded financial vehicle that allowed regular citizens to seamlessly bet on the price of oil directly from their smartphones without opening complex and heavily regulated commodity futures accounts. But the fund itself achieved this illusion by buying the exact same futures contracts, meaning the United States Oil Fund was also blindly holding a massive mountain of the toxic May paper. And as the final expiration date of the May contract loomed closer and closer, the panicked managers of the United States Oil Fund realized they were driving off a massive cliff. They had to violently dump their contracts onto the open market to avoid forced physical delivery. This added a massive tidal wave of institutional selling pressure to a system that was already breaking retail investors who thought they were simply buying a smart historical market. DIP were actually providing desperate emergency exit liquidity for terrified corporate funds watching their personal hard-earned savings get completely annihilated in real time. All of this unbearable tension exploded on Monday, April the 20th, 2020, a date that will forever be burned into the dark history of modern global finance. The Chicago Mercantile Exchange, where the paper is officially and legally traded, opened for business, and the absolute financial carnage almost instantly began. The brilliant software engineers at the exchange had quietly been warned days prior to frantically rewrite their digital systems so they could process negative numbers because the executives looking closely at the physical Cushing storage data knew that a mathematical impossibility was about to forcefully occur in the market. The price of the May contract started the chaotic day hovering around $18. But as the trading hours ticked by and the desperation reached an absolute boiling point, the price began to violently crash as traders trampled each other, scrambling for the exits. Dropping quickly to $10 and then rapidly plunging toward an unthinkable $5, highly paid traders were screaming into their phones and smashing their keyboards desperately, offering their contracts for mere pennies just to escape the delivery mandate. But the buyers had entirely vanished from the face of the financial earth, and the complex trading algorithms began to freeze as they lost their logical parameters. At roughly 2:00 in the afternoon, the absolutely unthinkable finally happened. The immense and violent selling pressure broke through the absolute floor of zero, and the price of the world's most vital energy source officially turned negative, sending massive shockwaves of absolute disbelief across global trading desks. Veteran financial news anchors were staring blankly at their live studio monitors, completely unable to logically comprehend the bizarre and terrifying numbers on their screens, as the price dropped to negative $10 and just kept endlessly falling. Entering a terrifying free fall into completely uncharted and dangerous financial territory, it finally settled at an agonizing and historic negative $37.63, a completely surreal number that fundamentally inverted the known laws of commerce, meaning if you were unlucky enough to still hold that specific expiring futures contract, you had legally agreed to pay someone nearly $40 just to take the oil away. You were essentially paying a massive financial ransom to anyone with an empty steel tank, literally pleading with them to magically save you from defaulting on a federal delivery contract. And the people who made an absolute quiet fortune on that specific day of chaos were the physical blue-collar operators who actually owned the steel storage facilities. But while Wall Street was bleeding out and retail investors were quietly crying, a small group of absolute financial cowboys across the Atlantic Ocean in London were quietly executing the most aggressive and brilliant short trade in market history. Leaning heavily into the absolute chaos while everyone else ran away in terror, a relatively obscure proprietary trading firm called Vega Capital realized what was happening, and instead of running away, they aggressively shorted the plunging futures market, riding the massive wave of terror all the way down deep into the negative abyss, walking away with roughly $500 million in incredibly clean profit. Meanwhile, in Washington, D.C., the political circus was entirely and predictably useless. The United States Congress completely blocked the necessary federal funding to buy the negative-priced crude, arguing loudly and publicly that it would be an unfair federal bailout for the wealthy fossil fuel industry, foolishly passing up the rare historical chance to secure the nation's energy future for less than nothing. The catastrophic damage was absolutely not just confined to the digital trading floors of Chicago. It violently ripped through the actual physical economy like a massive invisible financial hurricane. Small, independent blue-collar oil drillers operating across the plains of Texas and North Dakota were forced to permanently cement their life's work and officially declare immediate bankruptcy. Thousands of incredibly skilled blue-collar roughnecks lost their good-paying jobs in a matter of hours because a massive geopolitical ego trip half a world away violently collided with a sudden global pandemic. and the Wall Street system designed to theoretically protect against wild market price fluctuations, completely imploded and financially destroyed the very physical commodity. Producers. It was supposed to help this apocalyptic event completely and utterly shattered the grand illusion of the modern futures market, proving once again that when push comes to shove, the raw physical reality of the natural world will always violently crush the complex and arrogant mathematical fantasies of Wall Street traders, and that a massive digital paper fortune can evaporate into a massive physical liability in mere seconds. The guys trading paper oil simply forgot that it was a real and dangerous physical substance. They thought they were just playing a highly lucrative multiplayer financial video game until the game suddenly forced them to take immediate delivery of millions of gallons of a highly flammable toxic liquid, with absolutely nowhere on the planet Earth to put it. So the next time you hear a highly paid financial expert wearing a suit on television, talking about the incredible perfection and efficiency of global commodity trading markets, remember, the terrifying day the entire system completely choked on its own immense greed and oil became the most expensive and dangerous liability on the entire planet. If this deep dive into the negative oil crash of 2020 and the absolute madness of global commodity futures fired you up about understanding how modern fortunes are truly built and violently destroyed, then do me a favor right now. Smash that like button to let the algorithm know this conversation highly matters. Share this video with every single friend and family member who loves fascinating stories of how wealth and power are truly created. Let us keep violently exposing what they do not want you to see. I will definitely catch you in the next one, where we totally break down the next hidden chapter in the long history of money and absolute unyielding power. Until then, stay highly informed, stay incredibly skeptical, and remember that sometimes in the financial markets, the most valuable thing in the world is simply knowing when to walk away.